Good afternoon, everyone. It's Monday, the 26th of February. My name is Tilan Wickramasinghe. I'm the head of research for Singapore at Maybank Securities, and welcome to our show. Today is actually a very special date, the 26th of February, because 29 years ago, one of the world's largest investment banks, Barings, actually collapsed following the actions of rogue trader Nick Leeson. So for a lot of us who've been in finance for a long time, this is a very important day. But nearly 30 years on, things are very, very different. NVIDIA has become the fastest stock to reach $2 trillion in market cap in history, faster than Apple or Microsoft. Quite rightly, there's a lot of attention on the US markets, but there's this tiny little region, the ASEAN region, which is actually starting to see some very interesting foreign inflows coming through, despite all this noise coming out from the US. So we have Anand Padmakanthan, our head of research regionally, to talk about three key ASEAN markets, which he thinks has been overlooked, and there's a lot of great opportunities there. Following that, we've got Samuel Yin, who's going to be joining us to talk about Genting Singapore. Obviously, there's been some disappointing fourth quarter results, but he's sticking to his buy call. So he's going to be talking to us about why that's the case. Then we have Nick, the chart guy, who's going to be highlighting two key stocks, which is sending out some very strong buy signals right now. And then finally, I'm going to be highlighting one mid-cap stock, which is set to deliver some blockbuster results coming out tomorrow. So stay right till the end for that. But as always, let's start with the market moves. The US markets were up last week. The Dow was up about 0.2, S&P also kind of flattish, but we did see a lot of the Magnificent Seven doing pretty well, mostly driven by the AI wave. We did see China also doing pretty well. The Shanghai Composite up about 0.6%, and the HSI kind of flat, partly from some of the moves that the Chinese government made in terms of cutting interest rates and so on. A little bit mixed coming to our part of the world. The KLCI up about 0.2%, the STI down about 1.2% at this stage, and the SET down about 0.3%. But generally mixed sort of performance last week. I think some interesting opportunities to look out for as we go ahead into this week. And I think that's a really good point to bring Anand in, regional head of research, to talk about trading in the region. Now, Anand, ASEAN has seen a pickup in foreign investor flows in January, despite all the attention with NVIDIA and the Magnificent Seven in the US. What do you think's driving this? And is this sustainable, or is this just a blip?
Yeah, hey, good morning, Tilan. Morning, everyone. So I think when it comes to the flows, it's important to note that we are coming off a relatively low base in terms of foreign interest in ASEAN. If you look at 2023 as a whole, every single ASEAN 6 market saw net outflows on a full year basis. But as you rightly point out, as we come into 2024, we are seeing a recovery in interest. We did see inflows in most of the markets on a net basis in January. And you can see from the performance chart you have up here that we had ASEAN markets generally doing quite well year to date. Now, you can't really compare the performance with what's happening in the US, Japan, given that we are a very value-centric part of the world rather than growth-centric. And definitely foreign investor preference for a while now has been on the growth side of things. But nonetheless, we are seeing foreigners returning to the region. And I think this is really down to valuations. I think you pointed out on the show on many occasions that valuations in ASEAN are extremely attractive. And they are even more so given that this is a recovery year at the macro level for ASEAN as a whole. So across the region, we are seeing GDP accelerating, and we are seeing a budding recovery in manufacturing exports and an accelerating recovery in tourism. So overall, I would expect foreign inflows to continue to be on the positive side as opposed to last year where it was very negative. But I think it's a bit too early to say that we're back to the races or back to, I guess, the post, Nick Leeson time of, bull markets in ASEAN. Yeah, very, very, very early days from that perspective.
Yeah, so early days, but there's recovery in the air. Our economics team is looking at ASEAN GDP for the ASEAN 6, including, even if you add Singapore in there, growing slightly faster than China this year. So that's actually quite a good sign. Now, Anand, let's focus on three growth markets in Southeast Asia: Indonesia, Vietnam, Thailand. For Indonesia, we've just had a very decisive presidential election with President Prabowo coming out victorious. How do you read this in terms of the markets? And also, what are some of your top picks for Indonesia?
Sure. Yeah, I think it is quite positive for Indonesian markets, and there is some spillover in ASEAN as well from a political perspective. For ASEAN as a whole, politics has always been a bit of an Achilles heel for regional markets. And we saw that happen in Malaysia and Thailand in their elections last year. Things were quite uncertain, and the markets reacted quite negatively to that. But for Indonesia, it's been very seamless, and it's been better than expected. It's a one-round landslide victory. Yeah, so you have a very firm win for Prabowo. So we expect that to work in Indonesia's favor going forward in terms of policy continuity. We'll have to see how his cabinet stacks up. But overall, based on foreign flows, Indonesia continues to garner the most positive net inflows across ASEAN. And I think investors are quite comfortable with what they've seen. I think in terms of stock picks, our team in Indonesia has changed a little bit in terms of their bias. They were completely right to overweight the banks before the elections. Banks were up 10 to 15% in the run-up to the election results. But perhaps take some profit on banks, start looking at the other smaller sectors. Property is a big one where we see a lot of potential for growth. Stocks like Ciputra, Semarkon, Bumi Serpong, worth visiting. Related to that, infrastructure plays, I think we like the more indirect plays like cement. So like Cement Indonesia is one of our top picks in Indonesia. You can play infrastructure as well as property development upside through that stock. Also blue chips, where we expect foreign interest to pick up in Astra, Indofood, Telecom would be some of the names. And last but not least, commodities. Yeah, I mean, they've been off the radar because China has been very weak and China demand has been very weak. But we do expect Prabowo's government to continue with Jokowi's policy of downstreaming the industry to increase value add. And that will be good for stocks like Merdeka Copper and Vale.
Got it. Okay, that's great. Let's turn our attention to Vietnam. Vietnam's been one of the markets that has had a very strong rally last year, and that rally seems to be extending even after their Tet holidays. What are some of the catalysts for this, Anand? And also there's been a lot of hope for Vietnam to get upgraded from frontier market status to emerging market status by FTSE, which opens up Vietnam to a whole new segment of investors. What are the implications of this? And again, what are your top picks for this market?
Yeah, Vietnam, fantastic market. If I was 20 years younger, I'd learn Vietnamese and probably move there. There was a very interesting article in the media over the weekend that Vietnam will be one of the biggest creators of wealth in the world over the next 10 years. So things are really stacking up for them in terms of, having demographics and the policies to create that wealth. So I think, we are very excited about Vietnam, obviously. The macro is on track for almost 6% GDP growth this year. So very strong recovery from last year. And the banks are in good shape. Credit growth, 15 to 18%. And liquidity is good. They've been one of the first to cut interest rates in ASEAN. And that's really been quite stimulative for the economy and the market. And we're starting to see a few new drivers emerging as well. Usually we focus on infrastructure, FDI, the more sort of heavy capex kind of industries as being the growth drivers. But now you're seeing tourism, entering the mix as well. So the softer parts are starting to catch up. So when it comes to exposure, really, we have quite a favorable view for most sectors in Vietnam. But always a good place to start will be the banks, because that will be the underpinnings for the next 2 decades of growth. So in that space, we like stocks like Techcombank, which is the sort of the premium exposure to the sector. But you can also look at banks like Vietcombank, Sacombank as well for bank exposure in Vietnam. For tourism, Airport Corp, it's always good to play tourism through the airports because that's the main entry point for tourists. So Airport Corp in Vietnam is one of our top buy picks. Retail for domestic consumption, which is going to grow by leaps and bounds, undergeared balance sheets, huge growth in incomes. It's a bit of a no-brainer. So stocks like Mobile World and FPT in the IT space would be exposures there. And finally, property. Yeah, there's always a property boom when you have a rapid growth in the economy. So stocks like Novaland and DXG should be stocks to focus on.
Got it. And then very quickly, let's move to Thailand. We've seen some revival in investor interest there, particularly in some of the large caps like the banks and the consumer names. What are some of the pockets of opportunity there, and what are your topics in Thailand, Anand?
Yeah, so Thailand has struggled. It is one of two middle-income sort of trap countries in ASEAN. The other is, of course, Malaysia. But Malaysia has done a bit better because they've been able to formulate quite a few policies which are quite forward-looking, which are helping market sentiment. But in Thailand, we're still stuck with the basics. Yeah, GDP growth is underperforming, tourism is underperforming, and they've yet to pass the budget. Yeah, the new government is still struggling with that. So I think they have to sort that stuff out first before we can have a more sort of constructive view on the Thai market as a whole. But we do think the budget will pass soon, and that will be a second half story. So I think Thailand is more of a second half story for us within the ASEAN context. And the sectors that we like there for the second half, retail, telcos, as well as energy. So a bit of a defensive slant. But for retail, stocks that we like are the bigger caps like CPO, Home Pro. And I think when the budget comes through and we have this big consumption stimulus, those stocks will do the best. Also Com7. For telcos, a bit of a restructuring play. Telcos are not the most exciting plays usually, but we have had some M&A in the Thai space. So a stock like True, we expect will start to deliver on synergies from its restructuring. And also, sort of narrow the discount it's currently trading at to the rest of the sector. And finally, energy. A top pick there is a stock called Bangchak, which is a refining sort of play, and we expect refining margins to stay quite robust. The other stock we like, which is a big cap, is PTT, and that's very much on valuations and growth.
Got it. Thanks, Anand. Thanks for that. I know there was a lot of stock names mentioned, so please do download our newsletter for today, and you'll be able to drill down to a lot more detail on each of those stocks in our latest notes. Thanks, Anand. Anand's our regional head of research joining us. Now let's come closer to Singapore, and let's take a punt on Genting Singapore. Genting, fourth quarter results weren't that great. The stock sold off about 13% since then. We've got Samuel, who's our analyst for Genting. And Samuel, in your note, you're saying that a lot of the misses are actually one-offs. And you're actually still keeping a buy on the stock. So maybe, can you explain to us the results and what kind of went wrong?
Right. Happy Monday, Dylan. Yeah. A lot of the media focus on the results has been on the bad debts. Actually, bad debts inched up by only 20 million quarter on quarter, which is actually quite timid when you consider that the VIP volume actually jumped about 60% in the second half. The VIP business is a bit like the banking one, in the sense that if a bank's NPL ratios are too low, they are obviously not being aggressive enough. So the same goes for the VIP business. There were also some penalties and write-offs relating to a major hotel brand, which amounted to about 16 million. And there were also some one-off marketing expenses amounting to 20 to 30 million to attract more international visitors in the fourth quarter. Now, we look at them one by one. On the bad debts, they guided that they won't necessarily be as high this year, meaning that their credit policies are still quite conservative. On the penalties and write-offs, needless to say, they won't recur this year as it was a one-off event. On the marketing expenses, there is really a lot less need for it this year, as more visitors, especially from China, are already coming to Singapore due to the recently implemented visa-free access. To us, the top line is more important. Again, the fourth-quarter VIP volume of about 9 billion is still the highest in almost a decade. This is way above pre-COVID levels. And the fourth quarter's mass market revenues of about 380 million is 10% above pre-COVID levels. And again, this is even before Chinese visitation really picked up in January this year. Yeah, there will be some gyrations in expenses and earnings from quarter to quarter, but the secular growth in the top line ought to even earnings out in the long run. So we are maintaining a buy call and 116 target price in Genting Singapore.
Got it. So is there any short-term catalyst that we should be watching out for on for your buy call?
Yeah, we believe so. We are really looking forward to the first quarter's results. It has been widely reported that Chinese visitation to Singapore jumped 60% month-on-month. Again, even before the visa-free access took effect this month. It follows that Chinese visitation to Singapore will accelerate from this month onwards, and this will be very good for the high-margin mass market and non-gaming revenues. If the VIP win rate turns out to be within the theoretical range, we expect EBITDA to return to pre-COVID levels of 1.1 billion to 1.2 billion this year. And Genting Singapore is also in expansion mode, other than their RWS 2.0 program. During the fourth quarter earnings call, they confirmed what we already knew and communicated to investors in that they're keen to expand into Thailand if the opportunity arises. So if they are successful, this will open up a whole new growth market for them. So we will get more news on that towards the end.
Got it. So there's potential growth market, more Chinese tourists coming into Singapore as well. So so this this might actually be a good time to buy despite the share price weakness. Samuel, is there any sort of negative risks that we should be kind of watching out for?
Right. To be sure, there is one we can think of. The moratorium on casino entry levy hikes for locals expires on the 1st of April this year. But we don't think it will happen. Now, why we say that is because both Marina Bay Sands and Resorts World Sentosa recently committed to upsize their reinvestment program by 50% to an eye-watering $5 billion US each. It's a huge amount, which we believe that the government will want to see to completion. So we think the government will be reasonable and spare them another casino entry levy hike for locals. Yeah.
Got it. Thanks, Samuel. So do have a look at our note in today's newsletter. There's a lot more detail on Genting's results and especially on those one-offs. Thanks for joining us, Samuel. Now, let's bring in Nick, the chart guy. He's got two stocks that he says is sending off a lot of buy signals. Nick, great to see you. What have you got for us?
Thank you, Dylan. Thank you for having me today. For today, we highlight two stock in our regional strategist almanac. So the first one will be AZTECH Global. AZTECH Global, what we like about the stock because the stock recent movement. I think the one that gap up move on last Friday. Those gap up is pretty much has kickstart a new up cycle after the stock is breaking out its downtrend channel. Now, what may interesting is actually what happened before it break out. The stock appeared to be bidding a new sort of baseline within 61 Fibonacci level. It was right within at 84-cent region. So the subsequent breakout is actually has validated the new upcycle. So given the extremely higher trading volume recorded last Friday, we think this is actually a genuine breakout move and set to extend the ongoing uptrend toward the next resistance target at 1.02 and 1.13 at least for Sing dollar for short to medium term kind of move. So that is first one. The second one would be UMS. Right.
Yeah.
So one of the reasons why we highlight UMS because if you look on this, I think start on the 15th February, the stock is actually has staged a gap up and trade above the 52 weeks high. So this is actually a major resistance and has been taken out relatively ease on the back of high trading volume. So this actually has extended the ongoing uptrend for the past few weeks. So we're expecting the current uptrend set to continue, banking on the overall momentum, which is pretty much remain elevated. If you look reading on RSI, it's still not showcase any sort of the what we call that a divergent. The signal is actually trading on the overbought territory, which is actually good because overbought mean during after the period of consolidation, it means the stock has a tendency to push the price beyond the current sideways range. So which means at the current level, the uptrend set to continue further up as we put our technical resistance at 1.68, at 64 and $1.806.
Brilliant. Thanks so much, Nick. So AZTECH and UMS, two stocks to watch out for this week. Please do, have a look at the charts that are reproduced in our newsletter this week. Thanks for joining us. Now, we are almost out of time, so I want to quickly highlight a key conviction stock for us, which is Food Empire. This is nearly a $800 million market cap company which sells instant coffee mixes as well as other food and beverage products in key markets, including Russia, as well as Vietnam and some of the other markets as well. The stock has had a very strong performance. It's up about 30% in the last 3 months. But Jarek thinks that there is a lot more performance to be had from this stock. The catalyst, fourth quarter results. That'll be out tomorrow, the 27th of February. He expects that the numbers to be a blockbuster set of numbers with profits growing around 23% year on year for the fourth quarter. That's not all. A lot of the raw material costs that go into making these F&B products, they are stabilizing. So margins actually going into 2024 will actually be better than 2023. And that should also help drive overall earnings as well as volumes growing as well. With a record 2023, I think Jarek thinks that there is generally potential for special dividends to be announced in the fourth quarter results as management looks to reward shareholders. Plus, there could be more share buybacks as well coming through the rest of the year as well. So there's quite a lot of capital return that is going to happen for shareholders after these very strong results. Stocks only trading at about 10 times price to earnings, pays about 4% dividend yield as well, which is not too shabby. And our pre-results upside is around 18% from current price. So do take a look at the detailed report today. And watch out for their results tomorrow on the 27th of February. With that, we're kind of running out of time. In terms of key sort of macro dates, we still have quite a few results coming out. Some of the big ones are OCBC, which the banks reporting on the 28th. We also have Franken on the 27th of February as well. So hopefully we'll start to see that semiconductor cycle turning around, as well as CSE Global, which is one of our conviction picks, which is also out on the 27th of February. In terms of events, we've got a very special event happening on the 29th of February. Japan's hot right now. Everyone's talking about Japan. How do you kind of play this? And also, how do you play the AI theme in Japan? Both of those questions answered by our Lion Nomura Japan Active ETF seminar, which is on the 29th of February. You can sign up for that from the QR code on your screen now. With that, we've run out of time. Thank you so much for joining us this week. Have a profitable trading week and see you next Monday.